Indian 23, German workers rushed to spend their paychecks within hours, not because they were reckless, but because waiting until lunch meant their money lost half its value. A loaf of bread cost 200 billion marks. Wheelbarrows of cash couldn't buy groceries. In 2018, Venezuelans burned their own currency for warmth. Not as protest, the paper was literally worth more as fuel than as money. History doesn't repeat, but it rhymes. And right now, the next verse is being written. I've spent months analysing every major currency collapse of the last century. Weimar Germany, Zimbabwe, Argentina, Venezuela, Hungary's pengu, which inflated so fast they had to invent a new word for the numbers. And here's what I found. Exactly 5 asset classes preserved wealth every single time. 2 of them will genuinely shock you. But first, I need to show you something that could save your financial future. There are 2 investments that financial advisors. The safest investment in history has a 100% failure rate during currency collapse. Long-term government bonds. Your financial advisor calls them conservative. Your retirement fund is loaded with them. But here's what they won't tell you. In Weimar Germany, bonds that promised 30 years of steady returns became worthless before the ink dried. Families literally papered their walls with million-mark certificates because the glue was worth more than the paper. Zimbabwe's government bonds, 0. Venezuela's, 0. Yugoslavia's, wallpaper. Every single time a currency has collapsed, every single time long-term government bonds have been completely destroyed. Not partially, completely. So why do advisors still recommend them? Because they're measured against yesterday's risks, not tomorrow's. Because the models assume the system that issues the bonds will always exist to honour them. Because admitting the truth would collapse the very industry giving you advice. These bonds are IOUs from governments promising to pay you. The second death trap caught the cautious ones, the savers, the responsible families who did everything right. They watched their bank accounts with pride, decades of overtime, missed vacations, sacrificed luxuries, every dollar deposited for retirement, for their children's education, for security. Then inflation arrived like a thief with a master key. In Weimar Germany, workers rushed to spend their paychecks at lunch because by dinner, the money bought half as much. Housewives burned currency in stoves because paper money produced more heat than the coal it couldn't afford. That famous photograph, a man pushing a wheelbarrow overflowing with cash just to buy bread, that wasn't staged. That was Tuesday. Lifetime savings became worthless in 90 days. This isn't ancient history. Venezuela, Zimbabwe, Argentina. The pattern repeats with mechanical precision. And here's what keeps economists awake at night. The conditions forming right now mirror those collapses with uncomfortable. Here is the situation no financial advisor wants to explain. The 2 assets your parents, your pension fund, and every conventional expert told you were safe, government bonds and cash savings, these aren't just underperformers. They are the first casualties when the system breaks, every single time. So here's what keeps the smart money awake at night. If the foundations crumble, what's actually left standing? Because right now, in this moment, the conditions that preceded every major currency collapse in modern history aren't just present, they're accelerating. Debt levels governments swore were temporary have become permanent. Central banks are trapped between inflation they can't stop and economies they can't afford to crash. The clock is running. But here's what they don't tell you. In every collapse, amid the wreckage of bonds and the evaporation of purchasing power, 5 specific asset classes didn't just survive. They multiplied wealth while everything else burned. Real assets, hard assets, things that exist whether governments keep their promises or not. What are they? 4 nations, 4 continents, 4 different decades, and yet the same nightmare unfolded with surgical precision each time. Weimar Germany, 1923. Workers rushed to spend their paychecks at lunch because by dinner the money was worthless. A loaf of bread that cost 250 marks in January required 200 billion marks by November. Yugoslavia, 1994. Inflation hit 313 million% in a single month. The government printed a 500 billion dinner note. It couldn't buy a bus ticket. Zimbabwe, 2008. The $100 trillion bill became a collector's item, worth less than the paper it was printed on. Eggs cost more than most people earned in a year. Venezuela right now, the bolivar has lost 99.99% of its value. Families weigh currency instead of counting it. Different languages, different leaders, different excuses, But the collapse never begins with chaos, it begins with a single reasonable decision. Germany, 1914. The Kaiser needs money for war. Parliament suspends the gold standard, just temporarily, they promise. The printing presses start running. Zimbabwe, 2000. Mugabe's government faces a budget crisis. The solution? Print what they need. Just this once. Venezuela, 2003. Oil revenues collapse. Caracas authorizes emergency currency creation to maintain social programs, a stopgap measure. Argentina, 2001. Foreign debts come due. The peso gets unpegged from the dollar. Officials call it a strategic adjustment. Every single time the language is identical. Temporary, emergency, necessary, strategic. Here's what the economists understood that the politicians ignored. There is no such thing as temporary money printing. Once a government discovers it can create currency to solve problems, it will never stop. The crack doesn't come with a thunderclap. It comes with a whisper at the grocery store. First, it's the pensioner who notices her weekly shopping costs double what it did 3 months ago. Then it's the factory worker who gets his paycheck and drives straight to the appliance store, not because he needs a refrigerator, but because tomorrow that same paycheck might only buy a microwave. This is the psychology of collapse. Money becomes a hot potato. You spend it the moment it touches your hands because holding it means watching it evaporate. Shop owners stop printing price tags. What's the point? They are carrying markers now, updating numbers on whiteboards twice before lunch. Some switch to pricing in foreign currencies. Others simply close early, waiting to see what tomorrow's exchange rate brings. The social contract we never think about, the invisible agreement that those numbers in your account actually mean something, it starts dissolving. Neighbors who trusted banks for generations begin stuffing mattresses. Business owners demand payment in goods, not cash. Trust, once broken, doesn't crack slowly. It shatters. And here's the thing about exponential growth, your brain literally cannot process it. In Zimbabwe, 2008, inflation hit 79 billion%, not million, a billion, so prices doubled every 24 hours. You'd buy bread in the morning and by dinner that same loaf cost twice as much. By the next morning, 4 times. Workers demanded payment at noon so they could sprint to stores before their wages evaporated. Yugoslavia, 1994. Even faster. Prices doubled every 34 hours. The government printed a 500 billion dinar note. It bought a loaf of bread. People wallpapered bathrooms with currency because it was cheaper than actual wallpaper. Weimar Germany minted stamps worth 50 billion marks. Children built kites from banknotes. Workers carted wheelbarrows of cash to buy eggs, and thieves stole the wheelbarrows, dumping the worthless paper. This is the mathematics of collapse. It doesn't creep. It explodes. 1 month you're worried about rising prices. The next month you're burning. Now look at your screen. Look at it carefully. This is the M2 money supply of the United States from 2020 to today. 40% expansion in under 4 years. 40%. Now watch this. I'm going to overlay the early stages of Weimar Germany's money printing. Not the collapse phase, the beginning, the part nobody worried about. See that curve? It's identical. Here's Argentina before their peso disintegrated. Same pattern. Here's Zimbabwe 18 months before bread cost $1 billion. Same, exact curve. Every central bank that ever destroyed its currency started with emergency measures. Temporary programs, necessary interventions, the language never changes, the math never changes, and the ending, historically speaking, never changes either. The Federal Reserve's balance sheet has exploded from $4 trillion to nearly $9 trillion. The European Central Bank doubled theirs. Japan's has gone vertical. They're telling you, here's what most economists won't tell you publicly. The United States' debt-to-GDP ratio has now surpassed 120%. Japan sits at an almost incomprehensible 260%. Italy, France, the UK, all crossing thresholds that historically triggered sovereign defaults. But here's the critical difference nobody's discussing. After World War II, America emerged as the world's factory. Europe needed rebuilding. Demand was explosive. That debt melted away against surging economic growth. Today, there is no post-war boom coming. Manufacturing has already left. Populations are aging. Growth is stagnant at best. When Britain's debt to GDP exceeded 200% in 1819, it took over a century to recover. When Weimar Germany's ratio spiraled, the currency collapsed within 3 years. Argentina, Greece, Venezuela. The pattern repeats with mathematics. Trust is the invisible currency that makes all other currencies work, and right now that currency is collapsing faster than any central bank can print money. Gallup's latest data is devastating. Trust in government to handle domestic problems has cratered to 20%. Congress sits at single digits, banks, media, big business all hitting historic lows simultaneously. This isn't a blip. This is a structural breakdown. Look at France, 1789. The Assignat collapse didn't cause the revolution. The revolution happened because people stopped believing their king could manage anything. The currency died second. Weimar Germany, same pattern. Institutional faith shattered after military defeat. Then the mark became worthless toilet paper. Today's fragmentation follows identical trajectories. Left doesn't trust right. Right doesn't trust left. Neither trusts the centre. And crucially, nobody trusts the Federal Reserve to tell them the truth about inflation. When the German mark became worthless, one asset never blinked. Gold. Families who held physical precious metals through Weimar Germany emerged on the other side with their wealth intact. While their neighbours burned currency for warmth, they quietly exchanged gold coins for houses, businesses, entire city blocks. The purchasing power of gold actually increased during the collapse. But here's what most people miss. Paper gold failed. Certificates, promises, claims on gold held somewhere else? Worthless. Banks closed. Vaults were seized. Contracts meant nothing when the system itself was breaking apart. Only physical metal in physical possession survived. This isn't ancient history. During the 2008 financial crisis, gold ETF holders discovered their shares didn't actually entitle them to real metal. They owned a promise of gold, and promises evaporate when counterparties fail. Silver follows the same principle, with one advantage. It's when Germany's currency died in 2023, something strange happened in the stock market. While cash became worthless, shares in BASF Chemicals rose 40,000%. Siemens, Electrical kept paying dividends. People who owned pieces of real companies survived. Here's the counterintuitive truth. During currency collapse, you don't want to avoid stocks. You want to own the right ones. Companies that produce things people cannot live without. Electricity, food, medicine, water treatment. These businesses possess a superpower. They can raise prices. When inflation hits 30%, the utility company charges 30% more for power. When food costs triple, agricultural producers triple their revenue. The currency melts, but the earnings adjust. Look at Argentina's repeated crises. Shareholders in YPF Energy and Banco Macro didn't just survive, they preserved wealth while peso holders watched savings evaporate. When the Argentine peso collapsed, something strange happened in the black markets of Buenos Aires. Bottles of Johnny Walker became more valuable than gold chains. Cartons of Marlboros bought antibiotics when pharmacies refused cash. This wasn't random. These items share three critical properties that make them crisis currencies. First, they were universally desired. Stress doesn't eliminate vice, it amplifies it. During hyperinflation, demand for alcohol and tobacco actually increases. Second, they're divisible. You can trade a single cigarette for bread or an entire carton for rent. Third, they don't spoil. Properly stored whiskey lasts decades. Sealed cigarettes remain tradable for years. Fuel operates on pure necessity. When Venezuelan gas stations ran dry, people with stored diesel became neighborhood power brokers overnight. Here's what most preppers miss. These items appreciate during crisis while traditional investments crater. The Rockefellers knew something most investors forget. When currencies collapsed across Europe, their farmland kept producing. Every single harvest, every single year, agricultural land with water rights isn't just an asset, it's a wealth preservation machine that's worked for 5,000 years of human history. During Weimar Germany's hyperinflation, urban millionaires became beggars, but farmers with irrigated land, they ate well, they traded surplus, they emerged from the chaos with their wealth intact, often multiplied. Here's what makes this different from everything else. Land with water doesn't need a functioning banking system. It doesn't need electricity. It doesn't need the internet to verify your ownership. The Medici family understood this in 15th century Florence. The British aristocracy understood it through 2 world wars. Chinese families have passed down productive land through dynasty after dynasty, revolution after revolution. Water rights specifically matter because they're increasing. When hyperinflation gutted the German mark, a peculiar hierarchy emerged, not based on wealth, based on usefulness. Doctors stopped accepting cash entirely. One appendectomy? That cost a farmer 3 months of eggs and butter. Mechanics became local kings. They'd fix your truck, but only if you could tile their bathroom or teach their children mathematics. The blacksmith in one Bavarian village accumulated more real wealth than the former banker living next door. Why? Because metal needed shaping, horses needed shoes, and nobody cared about financial instruments anymore. Skills became the ultimate inflation-proof asset. You couldn't print more surgeons. You couldn't devalue a carpenter's hands. Human capital held its worth when every other form of capital crumbled. Entire underground economies reorganized around competence. Seamstresses traded alterations for dental work. Electricians bartered installations for fresh vegetables. The professional class who'd spent decades accumulating paper credentials suddenly envied the plumber. This wasn't primitive regression. The year is 2030. You wake up to news alerts that 3 major European banks have frozen withdrawals overnight. The dollar index is plummeting against hard assets, and your neighbor is panicking because his retirement account just lost 40% in 72 hours. But you saw this coming. The warning signs were always there for those paying attention. Watch for sovereign debt downgrades cascading across G7 nations. Watch for central banks accelerating gold purchases while publicly dismissing its importance. Watch for capital controls appearing in stable democracies under innocent names like transaction monitoring or financial security measures. The pattern repeats because the underlying incentives never change. Governments in debt will always choose inflation over default. Always. By 2028, if you see negative real interest rates persisting while official inflation numbers stay mysteriously low, that's your signal. When major institutions start accepting Bitcoin for settlement while regulators, the Hendersons did everything right. 40 years of savings, a diversified portfolio of bonds, a healthy retirement account. By 2031, their $1 million nest egg purchased what 200,000 would have bought a decade earlier. Across town, the Okafor family held the same net worth, but their allocation looked radically different. 20% in physical gold stored outside the banking system, 15% in productive farmland 3 hours from the city, a stake in commodities that moved inversely to currency devaluation, Bitcoin held in cold storage, and ownership in essential infrastructure that the governments couldn't afford to let fail. When the currency adjustment hit, the Hendersons watched their purchasing power evaporate. The Okafors? They weren't rich, but they were solvent. Their land still grew food, their gold still traded, their infrastructure holdings still generated income in whatever currency replaced the old one. Same starting point, same process, opposite destinations. Difference wasn't luck, it wasn't. Here's what history teaches us, and these aren't predictions, they're patterns. The families who survived Weimar Germany asked one question before every financial decision. What happens to this asset if the currency loses 90% of its value overnight? Start there. Look at everything you own through that lens. Second, study the Min-1 Nixon shock, the 2008 crisis, the 2020 money printing. Notice what assets preserved purchasing power and which ones evaporated. Third, understand counterparty risk. If someone else's promise stands between you and your wealth, that's a vulnerability. The Argentines who kept money in banks learned this the hard way when accounts were frozen overnight. Research jurisdictional diversification. Why did wealthy families throughout history spread assets across borders? What did they understand that most people ignore? Finally, examine your own situation honestly. How many days could you sustain your household? In 1923, a German housewife needed 200 billion marks to buy a single loaf of bread. By morning, that price had doubled. In Venezuela, families burned worthless bolivars for warmth because the paper had more value as fuel than as money. In Zimbabwe, trillion-dollar notes became bookmarks, souvenirs, jokes told by people who'd lost everything. The pattern doesn't whisper, it screams, and right now that pattern is being written again. The debt ceilings, the money printing, the inflation they keep telling you is transitory. You've seen the signs throughout this video, you know where this leads. But here's what separates those who merely survive from those who emerge stronger. Knowledge acted upon, gold endured, land endured, essential commodities, productive skills, and community networks, these held value when everything else became confetti. Government bonds and cash savings, they failed every single time. The rhyme is being written whether you acknowledge it or not. The only variable left is you.